My name is David Aferiat. I'm a co-founder and a managing partner at Trade Ideas. And I take what is it that I do? So I spend a lot of my time, it's a question that everyone asks, right? And it's part of the advantage and disadvantage of being somewhat separated. So we as a company, again, talk a little structurally, we're a company based in San Diego, but we have employees and assets and resources really across the country. I happen to be one of those, and our team in Atlanta. So throughout the course of Trade Ideas' growth, I've been very much involved in both setting the strategy for the company and working with our larger institutional partners that, for the beginning of Trade Ideas history, really powered our growth and established an ability to have a functioning, running company. And we're forever thankful for our founding partners. Those happen to be Scottrade and E-Trade. And growing from that experience, we were able to really go deeper into a subscription-based model and to find more and more customers, then add on to that a layer of technology innovation plus support and service, and you have the company that you're looking at today. So I just want to talk a little bit about some of the, as I said, about the trends that are impacting Trade Ideas and show you a perspective both from a brokerage perspective, walk you through also from a technology perspective, and then from other vantage points of the industry, from a hedge fund perspective and the like. So I'm going to go through a couple of slides here. Again, this is what we do. We've been doing it since 2003, market analytics. We really, at a core, are helping people make better decisions with information. The better the information, the more confident the decisions that can be made. Okay. This is, whoops, let me go back one more. So we are living in a different era. And as we've talked about, and some of the speakers have mentioned earlier today, we have progressed through some distinct periods of market structure and innovation around market structure. From the time where we had the early advent of technical indicators, a lot of which were designed before supercomputers ever existed. We still use some of these indicators, of course. To SO's bandits, single order execution systems, direct market access, decimalization, and we flirted with high-frequency trading, and we are as clearly in a distinct age of difference in the evolution of market structure and people's ability to engage in the market with artificial intelligence as any of these previous eras have been on the market. And it's important to recognize that. I also like this quote from Paul Tudor Jones, who says that no man is better than a machine, and no machine is better than a man with a machine. That's what just Michael was talking before about being bionic, right? So we're in an age where the use of artificial intelligence will be an ever more present requirement for making a decision in the market. Right? Okay, because right now, what's the sentiment, what it's like to be in the market? And this is as clear a distinction as I can draw about from the hedge point of view, as well as what everyone here would feel about being in the markets. And it's like Tom Cruise on the side of the plane. Right? Our goal is to kind of put Tom into the cockpit, but right now he's on the side of the plane hanging on for dear life. Why? Because there's a sensation out there after 14 years of providing market analytics. We know that the mindset of a lot of customers who come to Trade Ideas. Before they come to Trade Ideas, what are they feeling? A lot of pain and frustration around the sensation of always chasing after opportunities, doing research and spending hours waiting for setups that may or may not materialize. There's also the volatility of the markets, both the large presence of it, and as was discussed earlier today, sometimes just the lack of it that is very frustrating. This, by the way, doesn't affect just retail investment or self-directed investors. This also affects hedge funds. And one of the things that I'll leave with you today that you'll start to see in the papers is the little breadcrumbs and trails of hedge fund after hedge fund liquidating and calling it quits. The Wall Street Journal just yesterday, there was an article, I forget the name of it, but there's been several, and it happened about once a month. And that is as clear an indicator, a tipping point, that says that things are changing when hedge funds are kind of like, you know what, we're going to just, it's not from heavy losses, but it's from a trickle of non-performance that a lot of these funds are closing down and returning assets to their investors. But meanwhile, there's never been a better time to actually access data about the markets. In fact, it's this point about being in a data avalanche, but standing in an information desert. Is to say that I'm swamped with all this data. I don't know how to make knowledge out of this. I don't know how to take, what information do I take from it? That leads to this kind of analysis paralysis and this whole idea of checking off silos before making a trade. How are the technicals in this opportunity? Let me check the fundamentals on it. Oh, the move's already been made. Or maybe some people are talking about it on social media. So when I do this presentation in front of potential partners and enterprises, we talk clearly about the results that we are experiencing through the use of the artificial intelligence and the innovation we've made here. This is data as of the end of June, and this is an old slide. I've since updated this. It's now 28%. So this is a simulated portfolio, the official long-short portfolio of trade ideas and all of Holly's, the artificial intelligence's trade across all US equities. And as I said, this is up as to June 30th of Q2. We've now ended Q3, and that number stands at 28, but it's clearly above all the other indices that we measure against, the Russell, the S&P, and the like. This is another way, an important way that when I have conversations with enterprise potential enterprise license partners, is that we all know what the experience is of those who subscribe to trade ideas of being and using the analysis intraday. But there's also a component of being able to reach other segments of our potential customer base that are beyond that are intraday traders, but that may be swing traders and the like. And this example is, these are our trades of the week and the performance of all the trades of the week that we've done. And again, this also just ends Q2. And this is a bit of an eye chart, but the takeaway from here is that there's some clear winners, and we have always with each trade of the week, you provide us your email at trade-ideas.com, and we give you access to the trade ideas of the week, which arrives in your inbox on Monday. And the rules, essentially, it has an entry price, a profit target, and a stop loss. The entry price is when that trade becomes live. And there's a standard rule that we have in the weekly newsletter that says, given any profit, if there's a retracement of 20%, it's time to get out. That's the basic rule. And whether your own plans about how you would harvest a third, or how you would exit are your own, but our general rule is if it retraces 20%, you're out. And what you find is relatively short, losses are kept small and profits are allowed to run. That large skyscraper there is Weight Watchers, WTW. Pass over this. So from the vantage point of the brokerage partners that we talk about, for whom we talked about trade ideas, it's just brokers have a large kind of pyramid of their customers. Those at the very top are their most active, and those in the middle are often the ones that I talk to our brokerage partners often about, is how do you engage the fat middle of the pyramid, where you have people cycling sometimes away from trading because they've been burned and their accounts are getting smaller, versus those that are just joining and increasing their account size. That middle is often looking for a lot of information, looking for ideas to trade. And you may find yourselves in that bucket, or you may be at the very top. What happens is, we like to show this information of what happens when subscribers come onto the Trade Ideas platform and start using the data. Those who are most active actually generate, sometimes they don't change their trading behavior too much. The actual increase in their trading is relatively the same. But when you think about all the speakers that have been on the stage previously, you notice that they all have routines, dug-in routines that they live and die by. When you introduce new technology, and the reason why they have these routines is because they have to keep everything focused on the one variable, which is the next idea. How are they going to trade it, and how are they going to position, and how are they going to make a decision to enter and to exit? Everything else has got to be on automatic pilot. So when you introduce new technology to these individuals, it's pretty significant to suddenly change your routine and say, I recognize this as a very positive influence on my routine, and I'm going to change everything else. So although the trade lift, as we call it in the business, is somewhat smaller for active, the fact that you are rewriting their routine in order to adopt this technology is pretty significant, which is what we see. We see active traders adopting this wholeheartedly. The bigger effect for brokers, obviously, everyone wins when someone makes an extra trade, especially if it's a profitable one made from confidence. And in that vast middle, you'll see people who cycle up because they've got a trading plan with every idea. That stop loss, that entry price, and that profit target are the guardrails for making a confident decision. rinse, repeat, rinse, wash, and repeat, and you have a business there. So this slide is, we do a quarterly survey for the health of assessing how's the value of trade ideas being perceived by our existing subscribers. So we run what's called an NPS score, a Net Promoter Score. And it's simply, it's a survey that just reduces everything to one essential question, which is, would you recommend the services of trade ideas to anyone else? Right? And we scored well in the past. We've scored better this year in this quarter. And I think I have the number toward the end, but anything above 50 is good. I think we scored a 57. But in that same survey, we do ask a second question, which is, who's your broker? And while we have a large, everyone is pretty much represented on the right here, the clear standouts are, again, our partnership with Interactive Brokers because of what you've seen, the auto trading. And it just happens to be if you add Thinkorswim and TD Ameritrade. But as I said, and by the way, this is of all the direct subscribers. So we have partnerships in which there are people who access trade ideas who are not subscribers. They get the trade ideas from their brokerage, and that's not represented here. Right? Okay. What we see, and there's this chart describes demo and live trading together, but the real takeaway is if you take these pylons, these columns by themselves, you'll see month over month increases in trading and decisions that lead to trades from people using trade ideas and the artificial intelligence. And how we have access to this data is this is the sub-segment of customers, IB customers who use the Brokerage Plus, where we can directly see the executions that are being made. And it's, again, what I talked to before about people changing routines to adopt this technology, and then new customers trading more. Let me pass over this. This is the effect of the technology on our own company, on trade ideas itself. So this has been the sort of parabolic rise in trade ideas since the advent of the artificial intelligence. And you can see almost from the beginning of this chart goes the whole history of trade ideas. I mentioned before about working on strategy for the company. And one of the main strategies that we live by, it's easy to say, so I'm happy to share it, it's harder to do and execute. But the strategy that really led to the start of this climb in 2014 and into 2015, 2016 we launched the AI. So in 2015 we were building the concepts that we started to leverage to success thereafter. But the strategy was, how do you provide the most value of a product or service on the first impression? That's a strategy that can apply to anybody, from the Ritz-Carlton to the Hilton, to any customer-facing product or service. You have to show the most value of what people are going to receive on a first impression. And for many years, we had a tool that delighted a very unique set of customers and subscribers, those who were willing to go menu after menu to design their own strategies and dig into the data, and they loved it. Couldn't take, always wanted more. One more indicator, one more feature, perfect. But when we started on this path of delivering the maximum value on the first impression, we realized it's a lot to ask someone to go through a lot of menus before they get to a carrot like that. There's a lot of sticks. What if we reversed it and put the carrot up front and let people interested then go down and go through the menus to find the value? When we started doing that, we started to realize the best impression we could make is to show what's working. And we started to do that. We started to show the strategies that were working the most in the combination of alerts and filters we could find. But that wasn't scalable until we were able to bring on the core competency of managing big data, taking all the data that we had available, and then innovating on the artificial intelligence. That led to the scale of being able to show on a daily basis new optimizations of algorithms and the best combination for our customers, which led to Holly and her performance. And that's never a destination, it's a journey. The image of what's the most value is always changing. And so that's what propels us now, is to kind of always assess to say with these surveys, are we always showing the best value? If we're not, we can do better. I know we can do better. Okay. I just took away my thunder. That's exactly what we talk about here, right? So the idea of whomever we're talking, whether it's hedge funds, advisors, self-directed retail investors, we always bring the trade ideas triad to the fore, which is our service and support. It's not just the technology, although that's the key component, but it's also our engaging content, the webinars that we provide. Again, the AI, but our service and support. We have an hour of power training for every new subscriber, which is meant to say, you've joined Trade Ideas, congratulations, but here, let's set aside a time where we can get the most out of the tool for you. Understand how you trade and how you approach the markets, where are you on that continuum, and how can we configure the tool for your situation uniquely. And we do that with every single subscriber. Sometimes it's as much as a 2-week wait time, but even that's good because people can really focus their questions instead of the simple stuff about, I lost my password, right? On a broad level, I think this is kind of clear, but this is something that I do talk to with our institutions, and maybe, if you'd like to, I'll go through it quickly. This is from the 100,000 feet level. Essentially, we get in a lot of data feeds, data from the market, data from unique data sets, data that carry fundamentals, that carry earnings information, that carry news, social media. And that's what I mean by structured and non-structured. The structured is from the data, from the floor, from the exchanges. Non-structured is kind of like news and social media and earnings that aren't necessarily all ones and zeros. All of that goes into our back office, where we have an open platform to take in new feeds all the time and evaluate them. And we have what we create are the base strategies that Holly, our AI system, starts with. And a base strategy might be a sunrise mover, as you know, or what are stocks on a 52-week high with higher than usual social media and lower than usual options volume doing. It'll start with that idea and go through a process that's in this next series called the scenario backtesting and trade plan optimization, which is what we call our quantitative combine. I think Dan may have mentioned that yesterday or earlier today, but the quantitative combine is the overnight processing that this AI does, going through on a multiplied hundreds of thousands of times, the process actually that Michael walked us through just before, about going through that back test, looking at variables, optimizing on an individual basis, just repeat that 100,000 times to not only get the right combination. I talked before about that siloed data, breaking down the silos, mixing all these indicators, putting them in the right order with the right values and parameters, but then also applying the trading plan for that. Oh, this one could last for 2 days. This one could last for 20 minutes. This one should only be traded in the afternoon. This one should only be traded in the morning. Out of all that comes what we call the daily algo regime. I could go on and tell you stories of, there's a broker in Europe, for instance, that banked its whole, they bought an algorithmic trading company. And they said, this is so great, we're going to bring in our customers and we're going to treat it as an advisor. And they banked all of this on one algorithm from a company that they bought. And sure enough, in 2008, the algorithm went, they had $3 billion in assets under management, and this algorithm just blew up on them. They went through court, they had lawsuits, it was terrible. All they asked went away. All betting on one algorithm. The beauty of this system is that no one algorithm is every day, it's one that's been not only optimized, but it may not be the one that's used every day. But the combination of that, which is what Holly puts to the market, that can be tracked, and that performance is what we look at. So you're never betting on Sunrise Mover, one of the algorithms. It's always going to be the one. You're looking at all the horses in the stable in that particular race on that day. So the rest of this is we just add market data and real-time analysis. While all the ideas are coming from the regime of algorithms daily, there's a real-time analysis to say, is this working? How is the market today receiving these ideas? Is this a risk-on or risk-off day? And all this is for alpha capture. Okay. All this kind of leads to a branding of what is a trade ideas trade. You're making a trade ideas trade if the ideas coming to you are pattern-based from blended data sets. This is kind of a recap of what I've just talked about, right? Technical, fundamental, social. If all that's blended together, you're making a trade ideas trade. You're making a trade ideas trade if The idea comes from an algorithm with a 62% or higher win rate. Has all the analytics behind the algorithm for you to look at with an optimized complete trading plan, an entry price, a stop loss, a profit target. You're making a trade ideas trade. If it improves your human judgment, we're not looking to replace, even in the auto trading, it's meant to improve your decision making. You're making a trade ideas trade. If you're making a trade ideas trade, that's also with a sense of a real-time performance assessment. It's like going to the beach and being able to see, I've got a blue flag today. So kids, everyone's going into the ocean, everyone's gonna have a great time. And that's risk on, for instance. But if I see a red flag, I know that there's a riptide. I'm not going all the way in today, everyone be careful. You're making a trade ideas trade. Right? And finally, if it's based on actionable intelligence from Holly, our virtual analyst, you're making a trade ideas trade. I'll end on this note, really, and then we'll open up the panel, and there's plenty more that we'll talk about for the panel. But as I said, this new era of artificial intelligence is a unique and distinctive era from all the others that preceded it. And using artificial intelligence will certainly be as part of the future of decision making as sure as looking at a chart is today. It will simply be referring to an artificially intelligent analyst to give you an assessment of the market, to help you with the parameters of a trade, and then you'll make that trade. And everyone should have, at least when I talk to hedge funds, when I talk to our advisors, when I talk to our other brokerage partners, it really is the question of you've got to have a plan for bringing these capabilities to your customers, or someone else who assuredly does have a plan will be using that technology against your customers' trades, against your investors' interests. So I think it was said before, we're only going forward with this. Yeah. Okay, so I'll end there. We'll take a quick break. We'll have our panel. We'll keep things going.